watching Market Wrap, a weekly market update with Mr. Pankaj Pandey, Head Research, Icicidirect. Welcome, Pankaj.
Hi, good afternoon.
Very good afternoon. Pankaj, Nifty is holding up quite nicely. We saw a band of between 17,250 to 17,800. But, kind of momentum that we saw from the last 5 weeks, that slightly faded off. But yes, the levels are being held strongly. So what is your view on the Nifty from the current levels?
So I think from the levels of psychological levels of 18,000 around, we have seen market sort of consolidating in this sort of a range. And so I think that was the expectation which we also had. But I think once this consolidation gets over, our sense is that we are maintaining our bullish stance on the equities and we are expecting 18,300 levels for the month of September. And hopefully in the next 1 or 2 months or by Diwali, we hope that the 18,600 levels, which was the previous high, will be taken out. In that process, what we are also seeing is that the broader markets are sort of doing relatively better compared to main indices or the Nifty, and which is why we have seen small cap index still sort of doing quite well this week. And that kind of a trend we expect to sort of maintain going forward as well. Obviously, there are some volatility which will sort of come up in between. But overall sense is that it's a buy on dips kind of a market, and any dip kind of towards say 17,200 to 500 kind of a range is sort of a decent buying opportunity. And we expect that sectors like banking and financial services, auto, capital goods, and PSUs have also sort of started to come up besides consumption to sort of do well or outperform overall.
Pankaj, you just spoke about the outperformance in the broader markets. This week we saw mid cap and small cap ending in green, while Nifty ended in red for the week. What kind of sectors are really catching up interest of the buyers in the mid cap and the small cap space, or you will say that no, it's a broad based buying that we see across the sector.
So I think, say, when you sort of go into mid caps and small caps, typically it is a bottom up approach, what you sort of apply more rather than of sectoral, because a lot of themes really do not have big sectors, but these are themes which are still relevant, looking good, and probably not maybe global in nature the way you see for a lot of other sectors like metal, IT, and so from that perspective. It's a largely bottom-up approach, but our sense or our confidence in the mid-cap and small cap is coming from the fact that I think from a global perspective, if you look at probably India will be the only economy which is going the fastest. Then I think we have least of inflation problems and least of rate hike problems what one would have seen. And for next 2-3 years, we feel that the overall corporate dynamism is going to be a lot more better domestically, and which is why it's a sort of a good playground for mid caps and small caps to sort of do well. Obviously, earning wise also they have been sort of doing well, but yes, valuations have also caught up. But our sense is that overall, since they are still offering growth opportunities in this segment, so you are still sort of getting decent amount of stocks which can offer decent amount of upside, which I'll be sort of capturing today, some of them.
Yes, last time you promised to our viewers that you will come up with a set of mid-cap stocks that we're going to talk about a little later. We have Reliance EGM on Monday, the coming Monday. So what is that you're expecting this time from the big man, the Mukesh Ambani group?
So Reliance is obviously very important from a Nifty perspective, given the fact that it's the highest weighting stock. Now, there are a number of things which is what we'll be sort of looking at. So one is if there is a indication for a timeline of Reliance Retail IPO. So that could be one big announcement because see, this is one segment of Reliance which has been sort of growing very well. So they've grown at about 30% CAGR from 18 to 22 with a sales of about 2 lakh crores. And they've got a space of nearly 45 million square feet. Compared to that, if you look at a company like DMart, has got only 12 million square feet. So they are more than 4 times size of DMart. And what valuation we are sort of pegging is about 8.2 lakh crore within the overall sum of the parts basis. And our sense is that retail, the way most of the players are sort of doing well, expected to become better in the second half. If there is an IPO, we would expect a decent amount of enthusiasm there. So that is one thing which we are looking at. Then I think any update on the Reliance green hydrogen and solar power initiatives is what one can look at. Then probably they are looking to sort of time. So we'll be also watching for if there is any timeline for bidding off 12 mmscmd of their gas from the KJ basin, so
Okay.
which is expected to be commercialized. So I think that could be a sort of a medium-term trigger. But I think overall, Reliance Retail IPO can be a big thing.
Let's talk about textile sector. In 2020, 2021, textile sector saw a bit of traction, buying interest, but then it fizzled out with recession fears growing and then the cotton pricing hitting all-time high. So, what is the mix right now? How do you expect this sector to really perform? Because we have seen a decent amount of correction in all the stocks in textile space.
Absolutely. So it's been a volatile journey for textile stocks of late. And our sense is that with the kind of setup what we are seeing, probably things might turn up. So one, obviously, what we are seeing is that key producing regions like say, US or Europe or Brazil or China, so all of them are experiencing troubled weather patterns. For a country like US, which is sort of the biggest cotton exporter, the expected dip is about 28 odd percent. And as a result of that, we have seen international cotton prices sort of inching up 18 odd percent in the last, say, 20 days. On the contrary, when you look at domestically, the prices have been a lot more stable. And it is expected that Indian prices may not really sort of inch up so much the way global prices have done. But this presents an opportunity for Indian players because if Indian production is largely not that kind of impacted, which is what is the case looking like, then the relative competitiveness of Indian textile companies, which is a very price sensitive segment, can sort of go up. And that will sort of present opportunities for a lot of textile exporters. And so the disparity between international and domestic prices could be a sort of a blessing in disguise for the entire textile as a pack. So companies like say KPR Mills or Gokuldas Export, I think can benefit out of it. Besides companies like Indocount and a number of other names.
Let's now talk about the auto space. After commercial vehicles, now it is SUV, which is really seeing a good amount of volume generation demand for these SUVs. We just saw Mahindra launching their new SUV, and their bookings went up by 1 lakh, on the very first day. So, what is your view on SUV space in the auto segment, and your top picks in this space?
Now, within passenger vehicles, if you sort of look at, obviously four-wheeler has been a very bright spot. And within that, if you look at SUV as a segment is sort of gaining a lot more traction. Pre-COVID, SUV used to contribute about, say, 28% of the volumes. Now that has gone up to nearly 50 odd percent or 49%. So there is a clear preference of buyers towards SUVs, and which is why most of your auto manufacturers have been sort of launching up products in this specific segment. And we've seen good responses for the recently products, whether it is from Mahindra or whether it is from Maruti. So that way, if you look at the combined order book for both Mahindra and say Maruti is in excess of 3 lakh units, which is more than or around 2 months of their sales volume, or for Mahindra, it is about 6 months of their sales volume. So from that perspective, it is good. I think what is also interesting to sort of note as a trend is that the kind of technology which is sort of getting imbibed into these vehicles is also sort of seeing an uptrend, despite the fact that these vehicles are coming at a higher prices. So we are positive on this specific segments or companies which are heavy in terms of slate, in terms of their SUVs, and which is why Tata Motors with a target price of 530, Mahindra and Mahindra with a target price of 1550, and even Maruti with a target price of 10,000 looks good to us.
Let's talk about the metal space, beaten down sector, underperformer. But now there are talks that we are seeing in China that economic stimulus is being provided. It is grappling with the economic slowdown. That is one of the scenario. But there's a buzz on the street that government of India might do away with the export duty too. So if that is the case, and the China scenario we all know about, what is your view on the metal space now?
Well, yes, there is some light for metal sector down the line. So one is obviously when you sort of look at the Chinese production from for the month of July, that is down in double digits, so about 10 odd percent. Even the YTD also, the Chinese steel production is down, largely because there is muted demand. But what it is sort of doing is that this is keeping the prices resilient in the for the steel. And which in a way is good for Indian steel companies, and with an expectation that if Chinese production is going to be lower, probably the kind of dumping what they used to do will be lower, and that in a way will benefit Indian companies if they are allowed to export going forward. And once
Right.
these export duties are sort of taken off, probably it will do or their numbers are going to sort of improve quite going forward. And along with that, margin profile definitely is expected to become better, not in the next quarter, but a quarter after that. So, in all, overall numbers are or numbers for steel companies could improve, but Chinese stimulus is still sort of not too great. So let's see how sort of things pan out. But as of now, yes, it's a cautious positiveness which is sort of developing in the metal as an entire pack.
So you'll be buying something in the metal space, or you'll just wait and watch?
I think at this point in time, it is more of a wait and watch. I think I'll be covering one metal stock, which is largely a sort of a domestic oriented opportunity. But in metals, we'll prefer more of non-ferrous, which is Hindalco, unlike the metal players, unlike the ferrous players.
Coming onto the banking space, we saw catch up by PSU banks. PSU bank index was up nearly 4% this week. So, what is your view on the banking space, especially the mid-sized private sector banks and the PSU banks?
So one is we have already seen rally in the tier one banks, and it's a catch up what we are seeing in the tier two banks or the smaller size banks and also the PSU banks. And I think outlook wise, the commentary across segment remains positive, and there is an expectation that the growth rate is going to be quite healthy across segments. And as a result of that, we have seen good amount of price movement in a number of stocks, a lot of PSUs or something like IDFC First Bank. So all of them have sort of done well. And our sense is that within PSUs, something like SBI, Bob, Indian Bank looks good to us. And within private, you have IDFC First Bank, which is sort of rallied, and City Union Bank looks decent to us.
Talking about the defense space, Pankaj, due to the war that we saw between Ukraine and Russia and the tension that is building up in China and Taiwan, it is bound that and it is understood that the defense budget will be on rise for almost all the major currencies. Countries this time. So, if the defense budget goes up, this sector is also going to see some kind of a buying interest traction from the investors. So, how does this defense sector, look like as of now? And will you be a buyer in some of the defense stocks?
Absolutely. I think one thing is very clear from the government perspective is that the government has clearly shown commitment towards increasing indigenization of various platforms. And we've seen Indian defense budget largely has been, say, for example, 1.25 lakh or 24 lakh crores, say, for FY23. Navy and Air Force share the bulk of this budget. And the share of imports have been about 35, 36 odd percent of the overall defense procurement. And this is likely to come down because government is mandating higher indigenization for a number of segments. And we're seeing technology transfer happening across segments. And we have seen in the last quarter, all defense companies witnessing good amount of pickup in their execution. and which has led to a significant jump in revenues. So, for example, Bharat Dynamics, the revenue jumped 5x. HL, the growth was say about 124 odd percent. The others like say Bharat Electronics, Mazgaon Dock, 80 to 90%. Although the base was lower, so even then they have seen decent amount of growth. Margins were impacted, but overall, since the execution was good, EBITDA margins have been sort of relatively better. The visibility is even also good because when you look at defense PSUs, HAL, BAL, Bharat Electronics or Bharat Dynamics, they are sitting on decent amount of order book to the tune of 3 to 4 times their trailing 12-month revenues. And something like Cochin Shipyard or Mazgaon or shipping are sitting at even more larger, that kind of a multiple. So I think so it provides a good amount of comfort for defense players to sort of do well. So I think this is an upcoming sector, and few stocks can be part of a portfolio for from an investor perspective. Though majority of them are government owned, but I think the overall setup looks quite positive in the defense as an overall pack.
As promised last week, Pankaj is here with a set of mid and small cap companies, which he finds quite attractive for investment in long run. Pankaj, please tell us the companies that you have got us for today.
So yes, I am sort of proposing 10 companies, not to say that these are belonging to particular segment, and this is not the entire list of companies which we have been liking. Because mid cap and small cap is a sort of a big universe, and you sort of keep getting a lot of stories which are interesting on a daily basis. But there are some stories which we are liking. So one obviously is from the banking side, City Union Bank. I think this bank, two things happened when the COVID happened. The growth came down in single digits, and the asset quality also turned worse. Last quarter for them, credit growth was 12%. The asset quality, which is your gross NPA plus restructured, which was 10%, is sort of coming down. Our sense is that that will sort of come down further, and that will be an additional trigger for the stock. And this is one of the best stocks in the tier 2 banking space, gets highest multiples. And our sense is that this bank is slated to sort of do well going forward. It's a portfolio stock. The other stock is Action Construction Equipment. So management has guided for double-digit growth in FY23. This is a company which is into making construction equipment and material handling. So for example, biggest segment of them, cranes, the management is targeting a growth rate of 15 to 20 odd percent. Margin recovery is also expected and likely to become 11 to 12 odd percent in FY24. And trading at decent multiple of 18 times FY24. Capacity utilization for crane is only 70%. So obviously they can sort of do better asset turnover there. So that is one. Defense, I already highlighted, is a good opportunity. Bharat Dynamics looks good to us with a target price of 1070. Since is that the company will deliver 25% kind of a CAGR growth. Because they are sitting on an order book of about 13,000 odd crores, which is nearly 5 times their trailing 12-month revenues. And valuations is decent at about, say, 19 times. Now, in metals, while a lot of stocks are quite volatile, but I think Ratnamani is something which we have been liking. They've got one of their good orders in the month of August. And their combined order book is quite high at closer to 3,000 odd crores, 3,500 odd crores, which is the highest order book they've seen. And so management is guiding again for a top line growth of 15 to 20 odd percent with decent EBITDA margins of 16 to 18% kind of range. And unlike a lot of other metal companies, this company historically has good ROCs, and which is why it commands far more better multiples. And our sense is that this company is good with a target price of 2,000. Retailing is another segment which is looking good to us. So ABFRL is a sort of a well-known name. They're looking to sort of deliver 15% kind of CAGR kind of a growth over the next 4-5 years, which we are not surprised because most of the retailers can sort of do that kind of a growth. And since they have already sort of infused equity, so debt is not a worry. So this is one company again which we have been liking with a target price of 350. Siaram Silk Milk is another company which caters to demand in tier 2 and tier 3. And the good part is that this stock trades at a very attractive P multiple of say 9 times, and we're valued at about 610. So that is our target price. But the overall textile product demand or apparel demand in the tier 2, tier 3 is expected to sort of pick up in the second half. So hopefully this company should get traction. Indian Hotels is another company which came out with one of the best set of numbers in a weakish quarter. Now, our sense is that the second half is going to be even more better when you'll see a lot more foreign tourist arrivals happening into the country. And also, the company's margins are going to get even more better. So they're targeting a margins of 33 odd %. So this is another company which we like with a target price of 330. Then Easy Trip Planners is again a company which is into travel space or travel segment. And with we all know that the air travel has resumed fully, and we expect that the company will deliver about closer to 40% CAGR kind of a growth. This company has got a very lean cost model and charges no convenience fee, unlike some of the other competitors. So that way, this company looks good to us. We all know that number of flyers in India can multiply over a period of time, given the fact that the airport capacity and everything is, or overall infrastructure is going to sort of go up. And Phoenix Mills is another company which came out with good set of numbers. It's a sort of a quasi consumption play across segments. So what they are also doing is that they are looking to add about 6 million square feet kind of a mall space. So rental revenues are expected to sort of keep growing at 16%, which is their bigger segment. Since when you sort of look at the occupancies or the footfalls have been good, so this company also looks very attractive to us and is a sort of a folio stock. And Mahindra CI is another company which is part of M&M Group. We like this company largely because it's doing capex in the domestic business, which is a high margin business. And we all know that auto as a sector is on a revival mode. And this company has good financials. So free cash flow yields are about 5%, which looks attractive to us. And excluding goodwill, the ROICs look all quite healthy at about 30 odd %. So this is another stock which we like. I think this is not the entire list of stocks what we like in the mid caps and small caps.
Right.
But I think these are the stocks which we have been liking, and we expect them to sort of outperform the markets going forward.
I must say, a very well diversified, a good mix of companies that you have bring forth these 10 companies. We surely will talk about the other 10 companies next time when we meet. Since your list is quite long, as you said, Pankaj, but yes, the current stocks that you discussed seem to be a very good mix of all the sectors. And this is actually a portfolio which will be well diversified and will give good returns in longer term. So, Pankaj, closing comments. Now, what is your strategy for next week? Since we have, now we have Fed Chairman speaking tonight on Friday. What is expected there, and what will your strategy be as far as this being the first week of the September contract month?
So I think two, three things. One, I think domestically we are not alarmed because Indian VIX is still at about 18. So I don't think the Fed chair commentary might sort of do or extremely reverse the market direction. So that is unlikely to happen. Volatility can be there. Since next week is a sort of a truncated week, I think consolidation will sort of continue to happen in this wider range of say 17,200 to 17,900. But our sense is that overall market will sort of head higher, and for September we are expecting 18,300 kind of a levels to be touched by Nifty. In addition to that, auto sector stocks could be in focus because we might get wholesale numbers from auto. And our sense is that these numbers should start picking up going forward. And I think we have Indian GDP numbers, so that could also provide some clues. We are already sort of doing well. Probably it could be a reconfirmation of how better things have been. So I think that is another thing what one can look out or market would be watchful of. But overall, it will be a week of consolidation with an expectation that Nifty will consolidate. Mid caps and small caps would sort of relatively do better, especially mid cap, especially small caps. So, which is what has happened this week. So it is largely going to be a repeat of what has happened this week. And FIs have not been sort of selling. We have already seen one of the highest inflows since December 21. So a good part is that they have not been pouring money heavily, but they are not taking out money. So I think that's a positive takeaway from a FI perspective. So large cap to consolidate, but small caps to sort of outperform.
Thank you, Pankaj, for your time. Pleasure speaking with you as always. Thank you so much.
Thank you so much.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.